This is the Times Television Network, and you're watching ET Now.
Hello and welcome to Dealmakers. Well, 2013 may not be the year to remember clearly when it comes to the mergers and acquisitions, but it is not all that forgettable either, because deal conversions may be slow, but the hunger for activity is pretty much evident. So will 2014 be a hectic year for the people who make deals happen? And to tell us all about that is a special panel of those brave hearts who made a mark on the deal street in 2013. Joining us are Zia Mody, the managing partner at AZB Partners, V.S. Parthasarthy, the CFO and head of M&A at Mahindra Group, and Aisha de Sequeira, the MD and head of iBanking at Morgan Stanley, India. Welcome to the show, ladies and gentlemen. Starting with Zia Mody. With the kind of uncertainty that we have seen in 2013 from all possible fronts, well, is the M&A expected to pick up in 2014, and are there any signs of it already?
I think that probably M&A will be better in 2014 for the following reasons. One is that clearly we will have a new government, whichever party it is, and hopefully with a new mandate which will look to achieving quick victories in the short term so as to get the climate right. The second is that the deals that have been discussed this year, many of them are on slow train awaiting the elections. So once the elections happen, those will gain pace. The third is that sectors like healthcare and education are certainly seeing significant traction. And so to that extent, if people are convinced that those are the silos in which India will surely grow and give a return, private equity, strategics, financial investors will all look to that space. And then hopefully the fourth silo, which has to come, the only question is when, is infrastructure. When's it going to pick up pace? And with that will come a lot of M&A, consolidation in telecom, expansion in other sectors. So I believe that 2014 overall should be somewhat better than 2013.
All right, that's the lawyer's take coming in. Let's go to a banker's view then. Aisha de Sequeira then. How busy are you with the ideas and pitches at this point? And are you more optimistic in the new year, or is a lot dependent on elections?
I think we will continue to see inbound M&A volume happen. The India consumer story, consumer play is something that people continue to be very interested in. So sectors that touch the Indian consumer, be it consumer, financial services, will see activity. I think outbound activity will be a little bit more muted. And for a real pickup, I think in capital markets activity, primary capital markets activity, you're going to, I think, really look to sort of the second half of the year.
That's right, but it is the big conglomerates like the Mahindra Group which will really move the needle in this direction. So what is the thinking at your end, Mr. Parthasarthy? Will big promoters like Mr. Mahindra will want to make a big move, or will wait it out at this point?
As a CFO and as a conglomerate, there are two things that we need to do. One is, as a CFO, I would always say, in times of churn, the best place to keep the money is in your pocket. However, on the other hand, there are many opportunities which present during times like this. The M&A in me then would say that this is the right time to look for deals which otherwise would not be there on the street, and therefore look at it. So on balance, I would say, as a conglomerate, we will always be looking for good opportunities, but we would not be very, very adventurous. The rest of the time, I will say, keep your cash in your pocket.
All right, if there is a mouth-watering opportunity, definitely companies will loosen their purse strings. But coming to Morgan Stanley again, Aisha, which sectors are showing more traction for an M&A play in the coming year?
I think it's going to be those sectors that touch the Indian consumer that will see the most interest, which is, again, consumer, industrials, financial services, pharma. I think infrastructure is one sector that clearly requires a lot of capital. There is a lot of potential. And my sense is people will need to see what the new policy is that comes about with the election. And people will wait for that before there's major strategic activity that takes place on the infrastructure sector.
Yeah, but coming to one sector which has seen a lot of buzz in the last year, that is the mid-cap IT space. Now, coming to Mr. Parthasarthy, with the scale that Tech Mahindra has achieved with Satyam merger recently, it is looking as the most aggressive and acquisitive company in nature. Am I right on that?
As far as acquisitive is concerned, as I said, as part of all M&M organizations, they will also be pursuing a dual policy of being selectively aggressive, at the same time retaining money in their pockets where they need to, given the uncertain environment. And they will be certainly doing their share, as does auto and auto components.
All right, and coming to Aisha then, Aisha, Morgan Stanley has a huge role to play in stitching a large deal in the IT space this year, the Bearings Private Equity's acquisition of Hexaware. So will this particular acquisition and many such activities really spur more mid-cap IT space M&A in the coming year?
So I think that is something, Nisha, that has been discussed for a long time. You know, mid-cap IT consolidation, we haven't seen that. There are always challenges from a valuation perspective or sensitivities from an employee and client side, from an integration point of view. I don't see, frankly, IT consolidation as a large thematic. Clearly, it could happen on a case-by-case basis, but as a large thematic, you know, I don't see that as one of the drivers.
Right. Another sector is pharma, which has seen a lot of deals. Elder sold its brands to Torrent, MCure stake sale happened, deal in Gland Pharma as well. But there is an issue of the compulsory licensing, and Zia Mody will throw more light on that. Zia, is this going to really impact pharma sector's M&A play?
In the pharma situation, I think, you know, the arguments on both sides are quite loud. Big Pharma is saying, how do we invest billions of dollars in R&D if we're going to have to sell our drugs for such a cheap price? There is a chilling factor in terms of how much more they want to invest in or are committed to the Indian space for the life-saving drugs, which are the later patented protected ones. Generic pharma is saying, read the Patent Act. India signed up to the treaty, the WTO treaty, on the condition that it would carve out an exception to compulsory licensing. Here's the licensing exception. It's in the section. You came to India, you read the statute, you knew what compulsory licensing was all about. And by the way, we have 1.2 billion people, and most of them are poor and can't afford healthcare. So you can see that the arguments are balanced really on both sides. Where the debate comes out, I think, is going to be in the marketplace. I think the trend has been for the Intellectual Property Board to allow more compulsory licensing. We've seen the Supreme Court uphold the compulsory licensing regime. So I think it will get more challenging for Big Pharma going forward.
Right. Another area in Mahindra Group which really looks acquisitive is the tractor business. Now, Mr. Parthasarthy, you looked at the European markets. Would you look at entering for a buyout there as well in this space?
Europe actually is a high horsepower market. In India, if you recall, our horsepowers tend to be from a 30 horsepower or 25 horsepower to about 60, 70 horsepower. And China and US have conducive kind of horsepowers so that it enables us to go to this market. Europe, on the other hand, is majorly a high horsepower market. So that is why we have left Europe alone for the time being. We will always look at opportunity to go into Europe in future, but that's opportunities presenting itself, and both the time and the economics being right.
All right, at that point, it's time to slip into a short breather here, but we will come back and discuss some of the regulations that have been enforced in 2013, which, remember, changed the M&A landscape. So stay tuned for that.
Designs to desire. Hindwear Italian collection.
There are many ways to the next level. What's yours?
Introducing Zono Opus with Broadcom quad-core processor. Move up to the next level.
India has staked a very strong claim to graduate from a developing nation to a developed nation status within one generation. It's almost necessary, and I doubt anybody will dispute that. To make that happen, we need to build a very robust institutional framework.
Stanley Chartered presents the Economic Times Awards for Corporate Excellence 2013, Part 2, exclusively on ET Now.
Presented by Standard Chartered, here for good. In association with Binani Cement for generations to come.
Welcome back. You're watching Dealmakers. Now, one positive development on the regulatory front is easier international listing norms. And let's get a Morgan Stanley view on that. Aisha, are there any takers and which pockets could be interested?
My sense is that you will see some activity happen. It will take, again, a little bit of time. There are also businesses in India that have large international platforms where potentially branding is helped by listing some of these businesses internationally. On the other hand, pure domestic businesses where the currency volatility is going to impact the perception of the business internationally may not be the best candidate to take outside to list. So there are clear companies and sectors that are better suited for that, and we do expect to see activity happen over time.
And talking about international brands, well, coming to you, Mr. Parthasarthy. Now, Mahindra Group has been keen in this particular space. In fact, you had looked at Aston Martin also at one point as a brand that you could acquire. And of course, the acquisition of SsangYong also happened. So brands surely excite you in the auto space.
Brands is something that we need to look consistently. Mahindra provides us with a great platform. And now with SsangYong, that gives another option. But over a period of time, brand will always play a good part and a major part in any consumer industry.
All right. I'd known that brands are something that you would be looking at. And of course, your best competitors, Tata Motors, have a huge luxury brand in the international market as well. All right, coming to the regulatory framework then, Zia Mody, coming to you. Everyone has understood the new animal which was in the M&A space, the Competition Commission of India, and its role in the M&A sphere. But the Companies Bill has brought about many more changes this year in 2013. Buyback, mergers are made more stringent. Now, how does it change the way you are structuring deals at AZB?
I think that the regulator and the government is of the view right now that the minority is not in a position to protect themselves. That we have promoter companies in India, for the most part, unlike professionally managed companies abroad, and that the promoters will swallow up, wrongly in my opinion, to have that view necessarily all the time, will swallow up the minority whose vote means nothing. And therefore, there is a legislative and a regulatory stepping in to make sure that they will try and tilt the balance the other way. And that is how I think the genesis of the Companies Act happened. It happened before. But right now what is there is the majority promoter will be unable to sway and swing the vote as much as he could before in M&A activity.
Definitely making it more difficult for the promoters. So let's get a corporate view on that. Mr. Parthasarthy, are these regulations really a deterrent for the companies like yours?
Now we have the new Companies Bill, and there are some very good aspects in that company bill. For example, now an Indian company can merge into a foreign entity, so which was not there earlier. And there are other things which are coming. So there are therefore some very good parts in this. And I think it's a continuum where we are maturing as a country in terms of these laws, enabling M&A, but also safeguarding investors. However, only Companies Bill change